Hello everyone, Mike Arnold here, co-founder of Pat Trading Partners along with Bob Iacchino. Check in on Tesla, nice really bearish day. Little gap up and open. Elon announced or tweeted out that they're going to unveil the Model Y on March 14th, I guess. All it was able to do is get a slight gap open, and then it just tanked. So it seems like some of his allure of being able to, say, swing the stock around with announcements isn't working so hot anymore, especially after the last run-up into that conference call last week announcing the Model 3. Projections are that orders are coming in softer for that 36,200. He tried to then pump it up with the Y. That's not looking to have much traction. So we're really in full-blown bearish mode at this point, because fundamentally the stock is overvalued and it relies on Elon and Elon's mystique and the new products, whether they're real or imaginary, coming out to keep the stock going, at least at this major valuation. And it seems like some of that luster has worn off, especially with him closing all the retail stores. There's a lot of concerns out there that they paid off the bond in cash, which was $920 million. So that's going to hit their balance sheet real hard. They warned on profitability that they're not going to be profitable in the first quarter, and it's starting to reflect in lower stock price. The major line of sand is down here at 250. So we're still a good $35 above that. If it gets below 250, it's not going to be a pretty picture for the stock in the short term. If you're long, know where your stops are, know how you're trading it. If you're short, again, also know where unexpected things tend to happen with this company, so both sides know where your stops are. Right now, we're still focusing on a further decline, 279 major area. Below that, we'll be watching about this little area in here, about 266 to 270 is the next major area once we get below that 279. Now, in any rally, right now, again, the rotation zone's starting to separate on the daily area, and the bottom of the rotation zone coming in right at our significant level at that $300.50 area. So that's going to be the first key resistance we'll be watching. Really, the key area is 297.50 to 300 right in here on any rally. Above there, we'd probably just poke through the top of the rotation zone. Not enough major separation yet. We'd be looking back at that 306.50 where we gap down to, and then above that we'd be watching for either the partial gap fill to about 310 or the full gap fill, or at least to the 315 area. But we're not looking for much of a major rally unless some earth-shattering news comes out and really drives this, get some momentum going the upside. We're actually in bearish mode. Not yet oversold, and remember, once this does hit oversold, it can still become much more oversold. So that's what we have for you on this quick Tesla update, and we will talk to everyone soon. Bye for now.